right, welcome to the closing beat, everybody. Happy Monday. How's it going today? Hope you're having a good day here. Welcome. This is a daily show that we do to cover the stock markets. We cover the good, the bad, and the ugly. A little bit of ugly to cover today, but not as ugly as it was. So we'll get to that. We're financial advisors here at Jazz Wealth. We're just trying to help. This is just kind of a goodwill daily class that we do just to try to help. It's naturally goodwill advertising, as some of you may notice. But hey, we're just here to help, so we'll go through everything. If you have any questions, I'll try to help you as we go when we get to the end, actually. But I'll try to just run through everything and we'll take it from there. Well, if you look on the screens off to the right, you've got the Dow lower by 68, S&P lost about 0.5%, the Nasdaq did lose 0.5%, all because overnight, this was a fun night to stay awake and watch the markets. President Trump tweeted out about the tariffs. Got the deadline coming up on Friday. He said, look, if you guys in China don't get your act together, I'm going to raise the tariffs from 10 to 25%, and then I'm going to go through every single import that we have from you guys, and I'll probably put that at 25% as well. And that got people's attentions, right? When the futures markets opened last night, my time at 6 o'clock, the Dow was down 500 points like that. I mean, just boom, gone. Like, Nasdaq down over 2%. Chinese markets lost between 5 and 6%, the ones that were open anyways. And holy cow, so very, very weak start to the day. If you look at the chart on the bottom right-hand corner of your screen, you can see the gap down. It's a big red bar at the moment, but the gap down, and then the rest of the day spent floating higher. Now, what does your advisor do? Or did you sell today? Like if you're managing your own portfolio, did you panic? Did you make a change? Did your advisor kind of try to do something to help you out? Well, when things like this happen, we go to work studying. Anytime the markets get active, we start studying things and then we share all of that with our customers. And I want to share some of it with you today if you have a moment, so we'll take a look. Keep in mind that since we hit a low, let's go over to the charts here real quick. The S&P 500, since we hit a low back here in right after Christmas, last of December, we've been basically straight up. So today's news with the tariffs and everything, that was a prime opportunity for the markets to say, okay, I'm out, and start selling off. What happened? Well, we gapped lower, meaning we started the day lower down here, and then instantly, markets started to rally. Your tech stocks, semiconductors, even banks a little bit, they all started to rally almost right away. So that was like a chance for the markets to say, okay, let's take a break. Didn't happen. It gives you a real clue as to how strong the market is, at least for what happened today. No form of a pullback. Everybody that missed out, right, that sold at the end of last year, looks like they thought, hey, this is my opportunity, let me get in. I think the market's hinting at maybe a little bit more there. Not to mention North Korea just shooting off missiles over there. Nobody talking about that, right? So that didn't make too much in the news there. But in the Chinese markets, stocks that sold off actually sold off well over 5, 6, 10%, tripping their circuit breakers, or they call it limit down over there, I believe. Anyway, so we studied this. We said, all right, let's see. Do we need to get on this and talk with our customers about what changes we're making? Do we need to do anything? Our goal is to be as efficient as possible with all your investments. And so we studied it. We went back and looked and said, how many times has the market gapped lower by 1% or more? And if you go back to beginning of 2018, when Trump became president, there are 8 other times where that happened. Now, that's not actually any more or less than previous presidents. Go through Obama, you go through Clinton, you go through Bush, go through Bush W. Bush. That's where we stopped. And when you study that, it's pretty much about average for presidents in their first 2 years of going into their within their first 2 years of being the president. So anyways, this has only happened, 8 other times. So January 2nd, I want to show you this here. If I'll just zoom in to make it a little more obvious if we can, and slide over with our dojo charts here. If you go to January 2nd, check this out. If you're familiar with candlesticks, this is the last time it happened right here. We had some weak China numbers come out and the markets gapped lower. And then what happened? They recovered all of it and finished positive. Markets gapped lower by 1.6% on that day, and they closed positive by 0.1%. So you go, okay, that's only one data point, but not too bad, right? That doesn't seem like too big of a deal. Well, if you go back to December 27th, right over here, you can see the same thing happened again, so close together. We gapped down here by 1.5%. It then rallied from the lows 2.3% and closed positive by 0.75%. So there's 2 different time periods where the markets actually recovered very quickly. Now, this is actually pretty common. Like I said, the other times that it happened, we finished positive average gain. Well, actually, average is about flat. But there's only a couple times, 2 times to be exact, where the markets gapped lower by more than 1% and then did not rally. They closed at lows or even lower. That would be back October 2018 and November 2018. So the bottom line is, it was much ado about nothing, right? The whole looking back on this, actually the markets finished positive by about 2.5% a month forward from this happening. So if you take every single time that's happened and you look a month forward, the markets are positive. So lots of good news there for this pullback. Now, you know, if you've been participating, the markets have been nothing but straight up. This was a chance for the markets to pull back. The markets did not pull back. I think that makes it a little bit tough because, hey, when the markets don't pull back, and they just keep going straight up longer and longer, it makes for a more shocking drop when they finally do. So I'm kind of hoping this is actually the start of a respectable, easy pullback, maybe back to 2,800 on the S&P if you follow along on that one. So we'll see. Now, naturally, stocks that have exposure to China, SWKS has the most exposure, meaning they get the most revenue from China out of any other company in the S&P 500. They lost 1.2% today. I'm sorry, 1.2% today. And Wynn Resorts has about 75% of all revenues come from China. They also report earnings tomorrow, so the stock lower by 4% on the day. Just looking at a few other names, QCOM is an obvious one. We've talked about this quite a bit, actually. QCOM gets 65% of their revenues from China, so they took a little bit of a hit today. And Broadcom, which is actually now symbol AVGO, down 1.3% on the day. Again, they get a lot of their earnings from China, 54% to be exact. So naturally, those areas of the market were going to take a hit. Now, the next thing you want to look at is the semiconductors, right? A lot of those names are semiconductors. They get a big chunk of their revenues from China and that corner of the world. So you got 1.6%. But however, I can't actually zoom in on this to an intraday chart, but if you were to look, the semiconductors opened, right? First thing, 9:30 in the morning, they opened, ticked lower, and that was it. That was the bottom of the day. So real feel, like if you look at the intraday charts here, you get a real feel for the what do they call them? The FOMO traders that were just looking for any dip to buy. So I hope that kind of helps you in some way through some of these sectors. Tech sectors going to be a focus as well. That gapped under the 200-day moving average, only the second time since February, but again, it was able to close above it. So really not too bad there. Apple took a little bit of a hit. That's 18% of the XLK here. So Apple down a little bit. Naturally, China import news, things like that. Interestingly, Apple supports pushing hard on China. And actually, if you look through a lot of the political tweets today, on the Democrat side, they supported President Trump. Chuck Schumer said, good, be strong on China after President Trump tweeted that. So you got a little bit of connection there where those two are saying, all right, cool, we're going to work together on this. You're seeing a little bit more of that, right? A little bit with the infrastructure bill. You got a little bit today, not a lot. They're not like, shaking hands and, having parties together, but just a little bit there, right? No, just a little bit. You think they're going to work together from now on? Okay. Let's take a little bit deeper look here. Healthcare, that was in the news today. They had a conference where a hedge fund guy was talking about some of these names. I'll cover them in a minute. Major reversal in the healthcare stocks. Gapped lower today and completely erased all the gap and then some, closing above the 50-day moving average. One little thing, though, it's still a little resistance. I hate to be Mr. Bad News all the time, but we're still in the midst of this downtrend. And so basically that's where we stopped today. So investors were like, great, that's fine, but I'm not going to fight this downtrend here. If you're a bull on the healthcare space, awesome. This looks pretty good here in the short term. If you were hoping it would pull back like me, it doesn't look like we're going to get our way here in the short term. Some of the stocks in that category, by the way, were the healthcare companies. Cigna, amazing reversal today. Very, very impressive there, all because of comments from one guy at a conference. UNH, also quick reversal there. Always good when you see this type of reversal. By the way, if you're one of our customers, you have no idea what I'm looking at here, this video library is all for you. Go into the dojo, which I'm sharing with you right now. Click on Video Library. Sort by Wine and Wealth is one of our classes that we do for you on Thursdays. Scroll down just a little bit there, and you got candlesticks, part 1, part 2, part 3. There's a ton of classes in here to help you, but those will help you better understand the dashboard there. How's that for a little sneaky promotion. You guys like that? All right, let's take a look at some stocks here, and then I'll take any questions if you have them. Tyson Foods broke out to new highs today. You got earnings that were better than expected. I believe they beat by 6 or so cents. It's all in the description below if you want to read through it. Revenue better than expected. Hey, here's another company. They said, we are able to now start charging more, right? So not quite. I believe if you read through it, that they thought this was the bottom. So they've kind of had this margin compression over the last few years. They said, this is the bottom. We are now going to be able to start charging a whole lot more, spreading our profit margins out. Well, if you're investing in a company, that's a great thing, right? So you're happy to hear that. Tyson breaking a new highs there. Great year. It's almost up 50% on the year, by the way, if you're happy to be invested in that one. We are invested in that one here at Jazz Wealth. The Boeing company, back down to this triple bottom. There was a guy from, I forget his name. I think it's Scott. He's from TD Ameritrade. TD Ameritrade does a good job of actually telling you what their customers are buying. Not while they're doing it, but they do make sort of note of that. And they basically were saying every time that this stock comes back towards the 360 level, they see an influx of retail customers wanting to buy that. And you saw it again today. Although it was down a little bit, you had some news about the alarm system on there, that safety switch. But aside from that, down a little bit today, hits close to the 360 area. And once again, retail investors are like, hey, that's a discount in the short term. So still lower on the day. IBM, they got approval to buy, well, not approval. They got the all clear from the Justice Department to buy Red Hat. So this has been going on for a while, but basically Red Hat closing just a touch higher. The Department of Justice didn't have any requirements or what do they call it? No conditions. So they basically just passed on it, said you're good to go. IBM says, all right, we'll close on Red Hat here by in the second half of the year. And so looking pretty good there. And that's basically what I have for you. Disney makes $2 billion worldwide on Avengers. They made a movie, $2 billion. Kraft Heinz going to restate some of their earnings from 2016, 2017. That's usually a bad thing for the stock. They kind of signaled that before, so the stock's really not budging at all. Not too big of a deal there. And Uber, although it's not public yet, later this week it'll be public. Barron's wrote an article on that, basically saying what a lot of people have been saying. Careful, just be very careful if you think you're going to invest in that. How did Lyft do today? Some of the recent IPOs here. Lyft down 3% on the day, and Beyond. I saw Beyond rallied off the lows. Not bad, not bad. Rallied off the lows today. It did gap lower, but ended up finishing higher on the day. People still chasing that one. Tomorrow you got Anheuser-Busch. There you go. Ticker symbol BUD. They'll be reporting earnings on the day. That's stock's been performing well. It's not based in the States here anymore. That's been a while, actually. Expeditors, transportation in there. You got Regeneron Pharmaceuticals. I probably won't comment too much on that one. It's in the biotech space. I'm not a big fan. EA Sports Video Games, they'll be reporting earnings as well. That'll be after the close. Wynn, we just talked about that. A lot of their revenues coming from China. And so they'll report, it's already down 4% though ahead of that. And if you like Western Union, it's a stock that we own here at Jazz Wealth, they'll be reporting earnings as well. So we'll see how they do there. Wow, okay, so I think I took a lot of news and covered it in a very short amount of time there. So if you have any questions, I'll try to give it a shot here, see what we can do. Financial investors like, man, Apple, could it just give me a little more discount? I like that mentality, man. That's perfect. I like it. Jeremy, yo, what's going on? Vishal says, withdrew from a 401k from a previous organization. Should I invest this in month of May or hold off because the selling may go away? Well, I'd be more focused on why did you take money out of your 401k? Unless you're retired, you took the cash out and you're just like, I don't need it. Maybe I'll invest a little bit. I can't tell you when to invest it, but if you withdrew money from your 401k, what's going on there, right? That's not a typical question. C. Lily, watching from Canada. Oh, man. I love it. I love it. I like to see where people watch. There's a lot of people that watch in Canada and Australia for some reason. That, to me, is incredible. Just really, really, really interesting. Fashionably late. It's okay. We'll forgive you. Wang says, any thought on the stock market going forward? Yeah. So for me here, let's go back to the S&P. So if you go back over the last year, it's going to look a little messy, but I'll show you. So we've got this we call it a V-shaped bottom, meaning the markets fall rather rapidly and they rally rather rapidly. This is very odd. It does not happen very often. And it also does not happen where you just produce about a 20% rally off those highs. I think it'd be very normal for the markets to take a break. I also love the idea that Trump sort of pushed back and essentially walked away from the negotiations, although he didn't, essentially threatened to do that. I like that because it gives you a hint as to how much of it is priced into the market. I've been bringing that up, saying this trade deal, what if it's already priced in? We get a trade deal and everybody takes their profits. I think that's a good sign today, is Trump basically saying, look, we could beat the markets down a little bit and really push for a better deal. There's so much we could talk about there. But in the short term, I think it'd be totally healthy if the S&P 500 made its way back to 2,800, which would be about, well, it's a little bit different because I'm using a SPY here, but 2,800 to pull back into that support area nice and calmly would be just fine. For now, you can't fight that trend. That's the problem, is you can't bet on that pullback, in my opinion, because you're fighting just an incredibly strong uptrend. It's one thing to have a normal uptrend and you try to pick a top if you're that type of trader, but with this strong of an uptrend, had today finished near lows, okay, you could bet on that. But you just can't after what happened today. Too hard to bet on the pullback. So I just kind of hope that things will pull back a little bit, and we'll see what happens. Interestingly, if I could share this with you real quick, I won't say who it is. He's a nice guy. He's a really nice guy. But, we teach all of our customers here. I was talking to a financial advisor friend. He's older than me, works at a big company, makes tons of money. And he was complaining because everybody calls. He's like, man, the markets fall 1%, and everybody calls asking if they're panicking. And he's like, how you doing? And I said, not one call. Every call today was from new potential customers. And he's like, man, that's just so frustrating. And I'm like, why don't you teach them? Send them a video. Send an email out with a video just saying, hey, this is what's going on in the markets. Let them know you're even there, or I'm going to keep stealing your customers. And you know what he said to me? He goes, shut up. It was just so funny how he said that. I'm like, just teach, turn the camera on and share some information, help people out. That's what we do here. I'm big fan of that. Red Hat, what does it mean for Red Hat? It means that IBM is acquiring them. That done deal. That's it. It's now a part of IBM. Well, they haven't officially closed on it, but they will. Yep. Oh, rollover, Vishal. Yeah, if it's a rollover, yeah, if it happens to hit over here, we invest right away. So we won't wait to get you started, right? So the second it hits, we want to put it to work. I don't like to waste time with that. Nope. I don't like playing those games, proven to be wrong. Oil, yeah, a little bit higher today. Remember, it got beaten up last week, so you had a little bit of a pullback. Investors just trying to participate in that today. It did gap lower as well and showed the same sort of reversal, only positive. I think a lot of these oil-related products just have a little short-term bottom. I don't know that they bounce and make new highs from here. That would be asking a lot, actually. But just this little pullback causes investors to say, let me take a shot. Let me see if this is the bottom, buy the discount or whatever. Oh, there goes my... Can I get a new light? Anyways. Lyft, I don't have any comments as far as buying or selling that one up until after 200 days of it being public. I think you... investors that paid that high price there sort of got what they deserved for not doing their homework, and I think the same could possibly happen with Uber. So just a heads up, that's going public this week as well. We'll talk about it when it comes up, of course. Yep. 3M was in the news today. The same hedge fund guy that had commented on the healthcare stocks also commented on 3M. You could say, okay, that's a problem in the sort of mid to short term here. However, the stock's already sold off so aggressively. That's a short term discount. I can't tell you to buy it or sell it or whatever, but that's a great example of something that's fallen too far too fast, that the short term traders will come and try to play for a little bounce there. I think infrastructure is a new game, right? I mean, that's something you got to pay attention to, which includes airlines, by the way. Don't let old financial media back there talk you out of buying airlines if this infrastructure deal gets going, because until China officially launches their airline, they're building their own airplane, by the way, starting their own airplane company. Well, it's open. I mean, it's there. But I think you got to keep that in mind as well. That infrastructure is going to be a huge talking point here going in the next couple years. So could be a big one. I mean, it's definitely one to do your research on. Doesn't mean that every company in that space will do well. Who's going to be participating in that? Take a look at the sort of the development of that $2 trillion they're looking to spend. how's that going to be allocated? Are we just fixing airports? What are we doing? What's going on there? We'll be definitely talking about that more. Happy Monday. Big fan. I appreciate it. I really, really do appreciate you guys watching. We put a lot of effort into this show and the videos that we do, and it's basically all just goodwill marketing. I mean, that's our whole deal here. We've done TV commercials locally, but our whole deal here is just how many people can we help? And if we help enough people, some of them will come our way, and it should be good for everybody. So I really appreciate you guys stopping by and watching. If you hit the subscribe button, that's cool. I appreciate that too. But just the fact you're watching, really appreciate it. That's all I have for you today, so I'll wrap it up. I did cover the earnings tomorrow. Also, EGP is moving to the S&P 400, and GMS is going to take its place in the S&P 600. So if you're one of those index fund investors, you probably already know that, but that's the kind of thing you want to keep track of if you're just playing the index fund game. Hint, hint. All right, I'm going to wrap it up here. Enjoy the rest of your day. We'll be back tomorrow. Do this all over again. See ya.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.